The S&P 500 went on a pretty good day, so about $4 on the day. Friday was really solid, and you're getting a little bit of cushion, a little bit of continuation. But I believe going into Wednesday, that will be the determining factor on this week. But it's likely we get some buying until Wednesday, because Wednesday, again, like I said, it is going to be Judgment Day. It's going to be the most key day of the entire session, of the entire week. And we have to talk exactly about why. We're going to go into the charts and explain what we're looking for here on the NASDAQ, how you got a good close, and the best equities out there as well for options trading, things along those lines. But it's important that we understand what's happening overall with the market and the underlying factors that are moving certain things before we go into those equities and talk about direction. So the first thing I want to talk about is specifically what's happening at the Fed meeting, which is going to be Wednesday, and why it's so key. Now, again, over the past few days and weeks, you've heard Jerome Powell come out and say, look, we are not in a rush. We don't need to cut rates. We need to wait for clarity. We need to get clear understanding of what's happening based off of tariffs and Trump's administration and his new policies. That's been the tone from the Fed since Trump got elected, right? Back in November, they vaguely mentioned it, but they were clear on the last meeting. Now, as of recently, you've seen inflation numbers continue to come intact. You've seen the market continue to do well, but we've seen an overall shift in GDP expectations, and you've seen a slight rise in unemployment. Now, this is where things get tricky, because again, I think Trump is trying to get the Fed to cut rates. The Fed is trying to avoid a stagflation period because they don't know if Trump is going to stick with these or how long tariffs are going to stay. So it's very important to understand. And that's the real question going into this week. And if I had to put my money on it, I would be willing to bet they are not going to cut rates at this meeting. That's they're 99% sure about that. But I'm also pretty positive that they're not going to even hint at cutting rates in the near term until they get more clarification on what's happening from the Trump administration. Because it's important to understand that although inflation data is going down, you have to assume inflation might start peaking or rising a little bit in the near term with tariffs going into place and reciprocal tariffs coming in April 2nd. So again, that's going to slowly start to impact the economy. It's not going to be overnight. You're going to slowly see it start to affect those numbers. And we've already seen those numbers in the projections for GDP. And then we went over it last week as well on Friday with Michigan inflation reports in their expectation of going in for the next year. So again, you're already seeing that kind of hit the market and the expectation from the Fed as well. So it's important to understand that. Now, let's talk about the stagflation issue here, because again, I want to go into the charts, but it's important that you understand why and you have a viewpoint of when the Fed will cut versus when they won't, so you can understand that for yourself. So let's really explain this for as simple as possible, right? Now, basically, the Fed uses rates as a tool. Okay, that's very important to understand, to control inflation and then help and stimulate the market, especially for jobs, health, and to get jobs back on track if unemployment rises too far. And so what happens when they cut rates, it stimulates the market and lowers the cost to borrow money. Now, it's very important to understand, borrowing money is the biggest common denominator of growth in the market typically. If you look back at 2020, 2021, we had COVID, but guess what? The market bounced back so aggressively because it was the lowest rates that we had in God knows how long. I mean, you were getting a 2 to 3% mortgage rate. Your business loans were very cheap as well. There was really not a lot of risk in comparison to right now. So it's important to understand that. Now, this is where stagflation comes into effect. Well, let's say that inflation starts to rise, right? And in theory, what you would like to do when inflation is rising, you raise rates. So you kind of hurt the market in the short term to get inflation to come back down. Now, in theory, what you do is when the market starts to really hurt, unemployment starts to rise, you cut rates a little bit, so you stimulate the market a little bit, and you go back and forth, and it's a game of like cat and mouse, right? So you traditionally don't see the market cut, or raise. It's traditionally cut, pause, maybe cut again, pause, raise, cut, pause, back and forth like a chart, right? Well, over the past 2-3 years, it's been raise, non-stop. And then as of recently, we had a long pause with a few cuts. And now everyone's thinking, okay, we're going to cut rates at the same speed in which we raised them, which is an okay thing to try to guess and assume. But that's not what the Fed wants to do. And Jerome Powell has been very clear on that. Because right now, the biggest issue, again, when you look at stagflation, I think they explain it in here too as well, is right here. So stagflation should it emerge is hard for the Fed because typically policymakers would lift rates or keep them high to combat inflation. Yet if unemployment also rises, the Fed would usually cut rates to reduce borrowing costs and lift growth. Now this is the most important part because if unemployment rates rise fast, they're going to cut. They're going to cut, right? So again, but we need to see that get closer like to 5% on the unemployment rate, in my opinion, before they would do that. But that's very important to understand because that's arguably the most important job of the Fed is to maximize employment. Okay. So right now it's not clear the economy will seek into stagflation. For now, it's on business consumers, yada, yada, yada. But it's important to understand, hypothetically, if inflation starts to rise and they start to cut rates, and inflation stays an issue with what's happening there, you can have a period where the market doesn't also grow and then inflation continues up based off of tariffs. And if both of those things happen at the same time, you get stagflation, and typically the market performs its worst during that time period. Now, it's important to say that we are not there. And I think Powell is very conservative in making sure that we don't get there. He does not want us to get there whatsoever. And I don't think that's going to be an issue. But again, I think Powell and them are being very conservative in their thinking here. Now, what's important to understand is what the market is trying to price in. And this is very important. Now, a way you can look at this is going into yields and understanding what's happening there and looking at TLT in the bond market. Now, when you look at the 10-year yield this whole time when you were just dumping based off the idea of tariffs before Powell really started to address everything, well, guess what? Yields were dropping like a rock. So when yields drop, it's basically an expectation that it's going to get cheaper to borrow and the bond yields are going to go down, bonds might go up. So it's important to understand what's happening there as well. So when you look at that, and again, you go to something like TLT, which is a better metric of this as well. TLT, again, when the market was dropping like a rock, TLT was going straight up. Very important to realize. And then as of recently, when Powell started to talk, TLT started coming back down. Why? Because Powell made it very clear that he did not want to start cutting rates. He did not want to start getting aggressive. There was no reason to panic. There was no reason to fear fundamentally yet because you haven't seen the exact effects from Trump's tariffs, right? And that's going to take time. But the market, again, starts to just assume certain things. And we've seen that over the course of the past 2 years, whether it be large rate cuts, rate hikes. I think the first rate cut last year was priced in to be like March. And again, it didn't come to like, quarter number 4 into quarter number 3. So it's important to understand that people are going to be wrong. So the biggest thing you can do is trust what the Fed is doing. And as they go meeting to meeting, which has been the path they've taken over the past 2 years. They go into a meeting, they tell you what they expect, they tell you what they want to do, and they move on from there. And for some reason, people don't like to listen to what Fed Powell says. It's really eye-opening because if you listen to him, 9 out of 10 times, he will tell you what he's going to do within the next month, over and over and over. So really important to understand that, what I'm looking at, and that's kind of my viewpoint going into the Fed meeting, and which is going to be Wednesday. So I say all this to say this. Right now, you're seeing a decent move to the upside. You are seeing us get back above some of these key levels. Now, you still look decent, and I posted on Twitter as well. If you follow, then you can get more information on that as well on my Twitter. But I posted, if you closed above 19.8, it was honestly a pretty solid close. Now, I will say nasty wick into 19.95, but still, nonetheless, decent close. But before we go into anything else, I do want to say right now, if you are interested in joining Discord, trading with us to get all of our information every single day and throughout the day and ask us questions, the link is down below, or you can get our website, optiondrops.com. And again, this is where we go over everything that we're looking at, going over all of our charts. And this morning specifically, what did we say here as well? We were looking what was happening with NASDAQ, and we said, guess what? NASDAQ coming back into 1977, finding resistance. Theme for the last 3 weeks, get above that level. If we mount that level, we're looking for 19.95, then 20,120. Well, guess what happened on the NASDAQ? You mounted above, you pushed right into 19.95, found sellers, and we basically did nothing for the rest of the day. And again, you mounted that level right here at 19.77. Again, this was posted this morning at 8:19 before market open. So again, giving everyone an expectation of what to expect throughout the day as well. We also saw what was happening with Dow, ES, etc. And then the only trade of the day for stocks and options, what was happening with NVIDIA. We traded it to the downside down into 118. We did not get down to target number 2. NVIDIA ended up bouncing near the end of the day as well, with the market in the beginning of the day very weak. So again, all we really traded on the day, not a bunch of crazy trades, but anyways, that's it. If you're interested, the link is down below. Check it out. So going back into the market, what are we looking at? I think it's possible you see some chop to upside into the Fed meeting. I think it's totally possible right now. But I think right now, I'm concerned that you will drop off the Fed meeting. I'm leaning more towards that side of the fence. Why? Because right now you're moving up. You are. I see it. I agree. Going into this, though, what did I say that we wanted to see? I was very very clear. If you were going to see strong buying, you wanted to see volume. You wanted to see, I could be wrong. I could be wrong. Like, I want to make that very clear. Not everything that I look at happens. Not everything that I want to happen happens. I will be wrong. So people need to understand that, and don't get mad at me when I'm wrong, because I'm telling you right now I will be. But for confirmation for upside, I wanted to see a rise in volume, and I'm not really seeing that. You go to the daily chart here too on, for instance, the NASDAQ, and again, look at your volume. Again, it's down ticking as you're moving up. Now, traditionally, again, I made a video this past weekend on my second channel going over volume. But again, when you're getting this type of movement, so let's say your stock is moving down like this, right? If you're moving like that, and then, or let's just draw it out a little bit better so you can see. So you're moving like this to the downside, like you are with increased volume, right? As you drop down. But then you start to uptick like this as for a bear flag, right? Now, ideally what happens is you get movement such as this, to where you're moving down, right, with high volume, and then volume consolidates and gets lower in hopes of continuation. So when you're getting that consolidation or the move setting up for continuation to the downside or the upside, you get lower volume, and the breakout to the downside typically gets an increase of volume or to the upside. So that's where we're at right now and how you're moving. So I definitely am a little bit concerned and worried with where we're at. But again, I could still see some short-term upside going into the Fed meeting, because again, I don't think there's an expectation. I think there is an expectation that Powell's going to lean more towards cutting, but nothing has fundamentally changed with what's happening with tariffs. And I think Powell's notion is going to be, we will cut rates if things get bad, meaning cutting rates leads to a bad area of the market, or the market's in a bad position. And it's almost like Powell is leaning in towards that being the most likely scenario. So we'll see exactly what he says. They'll probably talk about GDP expectations and what's happening there. But again, large area of concern. You've also seen the dollar, which traditionally when the dollar starts getting really weak like this, it's a risk on scenario. Again, people want to go back into, equities, but the dollar is just very weak. Like, you don't want the dollar to just drop like a rock, right? You don't want the dollar to just go up either. You want it to kind of have a steady overall trend in what you're expecting there. Definitely concerning. You go into gold here as well. And again, I'm not a person that talks about gold a lot, but gold again closes basically near its all-time highs once again. So again, as I just take a step back and I look at the market, and it's like, look, you're in a sticky situation to say the least. I think you need to just be hitting the brakes, hitting the pause button for a second, because again, as you're going into this Fed meeting, I think there's a lot on the line, and I don't think the issues have just disappeared. I think that's a really big issue that people are kind of just ignoring right now. Like, we're just saying, oh, the issues are gone. And I've kind of been saying this for the past few days, but again, just my viewpoint. So what I'm looking at overall, I have the levels in Discord. I'm live tomorrow morning, every morning, 7:30 a.m. Central, and hour before market open. So let's go quickly into some equities and what I'm looking at. I might make a video on semiconductors later, so I'm not going to go over NVIDIA or any of those, but I'll go over some other names right now. So let's go into Apple first. So Apple levels that we've really been watching, this is your 2023 highs. If we start to see some big selling, I think Apple will come back down to 200, 199. Definitely would be keeping an eye on that. But as you look at where we're at right now, interesting action on the day. You had a decent close. I will say that right now. Getting back above basically 214 was really nice. But you had a rough start to the day, and you moved up and they came straight back down to lows. But what I will say right now is that you are making potentially higher lows, and this is a step in the right direction and what you really want to see, and you're making a little bit of higher highs. You could argue that you're flagging here, but again, you still look decent for the time being. A more bearish reaction would be making lower lows and still pushing down in lower highs. So I do like where we're at. It's a decent spot. Okay. If we start bouncing more, I could see us pushing back, honestly, towards 219, maybe even 218, but want to be patient, want to wait to see what happens there. That's where we're at. Amazon, this was a surprise on the day for me. Now, again, you guys know I'm very bearish on Amazon, but the fact that you're just grinding below 200 with a day like this. So what I always do, and when I look at the market, is I look at, number one, the index and how it's moving, but I like to look at the Mag 7, the biggest names in the market, and I like to see how they're moving. So the fact that NASDAQ was green today, you broke some major levels, you almost hit 20,000 on NASDAQ, and Amazon, you didn't end the day, you did end the day red by 1%. Right, and you're still rejecting at your 200 daily moving average. Like, this is bad, and you put in a lower. You didn't even text your 200 day, so this is very weak in my opinion. So I'd be watching Amazon again with bad FOMC, and this thing could come crashing down towards 187. I've been saying I like this name a lot. I just haven't gotten into a position on it. I just haven't, but I still really like it. I think it looks really weak. I'd be watching. Tesla, another interesting name here as well. I talked about this. I don't know if I talked about it yesterday or not, but the big thing that I was looking at here was the break of higher lows here. Now, if you guys don't follow me on Twitter, recommend doing so. You're welcome in advance. So I did a few chart requests. I didn't get to do as much as I wanted over the weekend, but I said it here as well. Let me move this over so you guys can see. I want to make sure it's visible. But yeah, have some gaps in the 200. But again, lately it's straight ass. But again, I was just looking for us to break the lows to break back down, or you get above 252 to push to 258. And that's really kind of how we moved on the day. So nothing really great there. Nothing awesome. Not my favorite, to be honest. But again, Tesla below 236 becomes an issue. And I really want to see if you start to make lower lows here as well. If you start breaking below this structure, I could see us coming back down towards those lows and finding sellers, because there's nothing really good going on for Tesla right now. Earnings aren't good. Sales numbers aren't good. It just is what it is, right? Meta also following this. I really wanted to see us hold below 602, but I think Meta is interesting here in the sense of, and again, it's a theme you're seeing. A green day on QQQ, on NASDAQ, on Dow, on ES, right? Strong, good day, right? Breaking big levels. But the stocks aren't telling us that. If I just looked at equities, I wouldn't assume that, right? Why? Because again, you're putting in lower highs here, right? You're clear as day, right? So right now you have the NASDAQ making higher highs in the short term, while the names that are carrying the NASDAQ making lower highs. And it's just, it's weird. I don't like it. It's not what you aim for. And again, it's just not a good overall look. So again, what I'm watching and the concern, Meta below 602, I think it could have come down to 586, 588, and then down towards the 200 SMA. Above 610, I'd be looking for 620. Above 610, you're basically illiquid, so you can really mount and hold. This morning you opened up, rejected, shot back down. So not really what you want to see, but overall where you're at and how you're moving there. Again, going into a name like Microsoft, decent hold, like honest to God. What I'd be really waiting for here too is if everything starts to go bad and crumble. But again, you have massive SR level here from basically all of 2024. You're trying to get back above it. Interesting. If this starts to hold, you can start pushing back into 404. If you flip underneath this 385, I think you push back down towards 370, 372, give or take. I'd be watching that as well. One of the bigger names, definitely very interesting here also. Baba and Chinese names continue to be just monsters. This is what we talked about also, right? And someone was asking, like, what do you think about Baba, Pinduoduo, these other names? And it wasn't that I didn't like them. I like China names. I thought they're very strong. They're great. The problem with them though is going long on like options, for instance, on Chinese names, even though they're strong, while the market was so weak. Now, what I did say, I was like, look, if the market starts to bounce, like they're going to get a lot of love, and that's what you're getting. You made higher lows nonstop the whole time here with Alibaba. Good overall look. You've made a higher high here for a second, so good looks. Like what you wanted to see, not surprising. Target here on Baba was 153. Get above that, you really start cooking. We'll go more into that as well. But Chinese names look really good. I still keep them on top of my chart. Definitely the strongest names out there right now. Going into Reddit, another name we mentioned is midcap. You bounce your 200 SMA. Again, this is why I was saying do not start going short on Reddit yet. It makes no sense. You're getting over aggressive. It's just a dumb bonehead trade. And again, this is why you get below 104, you hammer the short down to the gap fill. Do not do it before then. That's why 200 SMA, you have a lot of support right there. Keep your head on a swivel. Him stock, again, this is a little bit concerning. This is very concerning here. If things go bad in the next few days, this could get ugly. You broke, you're retesting. The question is now, do you start to mount back above and push towards the 200 SMA? So it's not time to go long yet. But if you start getting out of this, getting back below 33, the question is do you start going short towards the lows at 30, 31, and then ideally the 200 SMA as well. Now, I do think HIMS is going to be a great stock to buy long term, but in the short term, definitely an issue. Now, a little bit of another sector. I'm going kind of through a lot of names right now, but XLV Healthcare, because today you saw Dow. I think Dow was the best performer actually on the day. It was the most impressive. So XLV Healthcare has been an interesting story. You end up closing back below on Thursday and Friday below the 100 daily moving or the 50-day moving average right there. The 100-day is a little bit further, I believe. Let's bring that up actually really quick. And the death crosses are still trying to form. We'll go more into that tomorrow. I don't want to do that today. But yeah, you're back above the 100 MA, but you got below that on Friday, so it's worth mentioning that. And then today you remounted it, so that was a good look, right? Interesting spot here with healthcare. Very, very interesting spot, right? So Eli Lilly, one of the big names here as well. Not a lot of strength. But the question is if you get back above again, like how you have been doing, you can start pushing back towards the 200 SMA. Now, if we reject here and we can't get back above 830, I think you push back to the 100 MA and start to gap and move slowly back towards the downside. So definitely a concern there. UNH is another name here as well, back in your basically year-long range that you had from basically 530 down to 436. Pretty ugly name. This goes all the way back to 2022. It's like a 2-year range, so really ugly. We'll be watching that as well. Cloud names are kind of meh. You're getting a little bit of a bounce on the day. Pretty to see back above the 200 SMA and the 100. But I want to see more confirmation. If you get more buying here, I can see CrowdStrike back towards 388. Very interesting there as well. But again, it's a matter of, do buyers continue stepping into the market? Do you get what you want to see? Last thing I'll cover here is going to be Palantir. Again, Palantir back above 85, 84, what you wanted to see. That was your big level. Like we mentioned as well, it came to your 100 MA, bounced. You couldn't really start hammering shorts because, again, you bounced to where you needed to bounce. Got back above these levels here as well, trying to slowly move and grind back to the upside. If the market starts bouncing and you get IWM, these other names start, these other mid caps are bouncing, I think Palantir moves back towards 100 with ease. So you're in a really interesting spot, right? But I think right now the story is wait till Wednesday. Let Fed Powell, let them say what they're going to say. Let the market start to react and then trade based off of how the market reacts. Because I think if the Fed comes up with the notion that they're not cutting for a while, I think the market gets hit again. I'm being 100% dead serious what I'm looking at. If you have questions, comment down below. I appreciate all of you. Follow, subscribe, do what you got to do. Discord, all that down below. Have a good one. See you later.